All right. I think we did it. Hey. 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 Make sure everything's a little bit different at the start. Technical difficulties today. The internet went down. I'm not quite sure why, but a quick bounce of the router seems to have resolved it. That does mean, unfortunately, that after we get completed with this particular episode of the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner, that I will need to go ahead and make sure all of my nodes and everything reconnected and we're syncing with the blockchain, because I am solo mining a ton of stuff. But that being said, today we're going to be talking about the Bitcoin ETF and how it has not had the impact that a lot of retail investors expected it to have, and what we should be expecting in the near future. Because of course, as cryptocurrency miners that have been doing this for quite some time, we are aware that the halving is coming up in April, and that is the biggest indicator of the start of the next bull run. And we may be seeing a retracement here, just as we see in every single 4-year cycle that has ever existed since the inception of Bitcoin. I go into those details, of course, on my crypto mining e-course at sonofatech.com, which you can check out. If you're curious about the speculative mines I am participating in, please go over to sonofatech.locals.com and become a supporter over there for that and additional awesomeness like live streams of testing all of these GPUs that we now have in stock. One of every single GPU that is currently available on the market. We will be going through testing and creating review videos akin to that of the latest review video of the BC250, which I am super excited about because I finally am able to get out here and start working and up the quality of the content on the channel. So I hope you guys are enjoying that. I want to thank everybody for being here. The other things that we got to talk about, other than like the dozens of articles surrounding the Bitcoin ETF, is going to be the Caspa Testnet has gone live with the Rusty Caspa, which is the rewrite from Go language to Rust. We're also going to be talking about official pricing as we for the RTX 40 Supers, which we talked about at length last week as far as specifications. They all seem to have been on the mark with the rumors, so expect to basically have the 4070 Ti Super be pretty awesome for cryptocurrency mining from both the memory intensive perspective and the core intensive perspective. I'll be getting those in this month to do the testing and confirm that for you guys. We also have a very interesting release from Cooler Master, which could be very important for cryptocurrency miners that are looking into proof of useful work, as there is a 2800 watt power supply with 4 12 VH power connections on it. That's going to be really good for things like Vast AI, etc. If you are looking into going that route with your farm, you have more options on the power side of things. We're also going to be talking about a really interesting SSD drive or NVMe drive that combines both PCIe 4.0 and 5.0 standards to create the Franken SSD. This one's coming from Samsung, and I am super interested in it, so I wanted to talk to you guys about it. We have a new release from Rigel Miner as well, and we have Trade Ogre now live with Caspa and functioning. So if you had held your Caspa on Trade Ogre through all of the inability to deposit and withdraw your Caspa, congratulations, you can go ahead and get the correct price for your Caspa. I guess a big brain play would have been buying the Caspa at a super discount over on Trade Ogre. If you were that smart, congratulations. That was a high risk though, of course, because there was no way to withdraw it. And then we'll get into, of course, all of the mining profitability for the week. And don't forget to send a super chat to get your questions answered at the end of the show, or tag at Son of a Tech, which will highlight the message orange, making it even easier to read. I go by Blind Run on the internet and Matthew in real life. Let's go ahead and get into it right after today's ad. Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners has recently launched an app on iOS and Android that lets you browse their inventory by profitability and return on investment. Follow the affiliate link in the description and use promo code SOAT for a discount. It's a great week for mining as the cold weather has rolled in, even down south in the Texas area where my farm is. And along with that, we had the announcement of the Bitcoin ETF approvals from the SEC, known as the Securities and Exchange Commission. There's an official statement from Gary Gensler on this particular topic on the main website at sec.gov. And it goes on to say, today, the commission approved the listing and trading of a number of spot Bitcoin exchange traded products, shares. Product shares. I have often said that the commission acts within the law and how the courts interpret the law, beginning under Chair Jay Clayton in 2018 and through March 2023. The commission disapproved more than 20 exchange rule filings for spot Bitcoin ETPs. One of those filings, made by Grayscale, contemplated the conversion of the Grayscale Bitcoin Trust into an ETP. We are now faced with a new set of filings similar to those we have disapproved in the past. Circumstances, however, have changed. The U.S. Court of Appeals for the District of Columbia held that the commission failed to adequately explain its reasoning in disapproving the listing and trading of Grayscale's proposed ETP. That sounds a bit catty, doesn't it, coming from old Gensler over here? He's like, oh man, they wanted better reasoning and we didn't have it. The court therefore vacated the Grayscale order and remanded the matter to the commission. Based on these circumstances and those discussed more fully in the approval order, I feel the most sustainable path forward is to approve the listing and trading of these spot Bitcoin ETP shares. The commission evaluates any rule filing by a national securities exchange based upon whether it is consistent with the Exchange Act and regulations thereunder, including whether it is designed to protect investors and the public interest. The commission is merit neutral and does not take a view on particular companies, investments, or the assets underlying an ETP. If the issuer of a security and the listing exchange comply with the Securities Act, the Exchange Act, and the commission's rules, the issuer must be provided the same access to our regulated markets as anyone else. Importantly, today's Commission Act is combined to ETPs holding one non-security commodity Bitcoin. It should in no way signal the commission's willingness to approve listing standards for crypto asset securities, nor does the approval signal anything about the commission's views as to the status of other crypto assets under the federal securities laws, or about the current state of non-compliance of certain crypto asset market participants with the federal securities laws. As I've stated in the past, and without prejudging any one crypto asset, the vast majority of crypto assets are investment contracts and thus subject to the federal securities laws. Basically, what he's saying here, just to give you guys an idea, is this is only in relation to Bitcoin in particular, and it doesn't flow down into other cryptocurrency assets. And so that's kind of where we're at. Now, I assume at some point that this will have precedent in other crypto assets, especially if they're proof of work assets. I think where we get into whether or not the approvals will happen for other crypto assets will be based on this to a certain extent, due to the fact that in most cases, a lot of staked cryptocurrencies and proof of stake cryptocurrencies more than likely fall under a more stringent securities law. At least that's my initial thought on it. Investors today can already buy and sell or otherwise gain exposure to Bitcoin at a number of brokerage houses, through mutual funds on national security exchanges, through peer-to-peer payment apps, on non-compliant crypto trading platforms, and of course through the Grayscale Bitcoin Trust. Today's action will include certain protections for investors. First, sponsors of Bitcoin ETPs will be required to provide full, fair, and truthful disclosure about the products. Investors in any Bitcoin ETP that is listed and traded will benefit from the disclosure included in public registration statements and required periodic filings. While these disclosures are required, it is important to note that today's actions does not endorse the disclosure ETP arrangements such as custody arrangements. Second, these products will be listed and traded on registered national security exchanges. Such regulated exchanges are required to have rules designed to prevent fraud and manipulation, and we will monitor them closely to ensure that they are enforcing those rules. Furthermore, the Commission will fully investigate any fraud or manipulation in the securities markets, including schemes that use social media platforms. Such regulated exchanges also have rules designed to address certain conflicts of interest, as well as to protect investors and the public interest. Further, existing rules and standards of conduct will apply to the purchase and sale of the approved ETPs. This includes, for example, regulation best interest when broker-dealers recommend ETPs to retail investors, as well as a fiduciary duty under the Investment Advisors Act for investment advisors. Today's action does not approve or endorse crypto trading platforms or intermediaries, which for the most part are non-compliant with the federal securities laws and often have conflicts of interest. And of course, this is going to refer to any kind of exchanges that are currently out there. I am curious which ones are actually fall into compliance, if Coinbase or Crypto.com, for example, actually fall into compliance. And then, of course, there's other ones like obviously something like TradeOgre does not fall within compliance. I still prefer that we have non-compliant options out there because I think that cryptocurrency is not to be fully regulated, and that is my opinion, and I'll stick to that till the day I die. I'd like to hear your thoughts and opinions, though, in the live chat and the comment section down below. Third, Commission staff is separately completing the review of registration statements for 10 spot Bitcoin ETPs simultaneously, which will help create a level playing field for issuers and promote fairness and competition, benefiting investors and the broader market. Since 2004, this agency has had experience overseeing spot non-security commodity ETPs, such as those holding certain precious metals. That experience will be valuable in our oversight of spot Bitcoin ETP trading. Though we're merit neutral, I'd note that the underlying assets in the metals ETPs have consumer and industrial uses, while in contrast, Bitcoin is primarily a speculative, volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. You know, similar to the US dollar and cash. While we approved the listing and trading of certain spot Bitcoin ETP shares, we did not approve or endorse Bitcoin. Investors should remain cautious about the myriad of risks associated with Bitcoin and products whose value is tied to crypto. Now, a lot of people have been waiting on this approval in particular to basically have the price of Bitcoin increase, but that is clearly not what happened. While initially there was an increase in the price of Bitcoin, it has retraced quite significantly, all the way down from 47,000 when the fake approval of the ETFs went out to about 42,000. Speaking of the fake approvals, we do have a statement from the SEC on this. In particular, my humble opinion is it's hilarious that the SEC claims that they were hacked and that right before the actual approval of the ETF went live, there was a fake tweet that it went live. And then, of course, there was capitalization on that price, and it basically shot up through the roof initially and then came back down as everybody sold. There's another thing that we have to talk about here too, I think that we'll get into right after we talk about this, and that is, of course, the miners' influence on it. But the U.S. Securities and Exchange Commission released this statement in response to the hack of its X account that led to a fake announcement being issued in the SEC's name, saying the regulator had approved a spot Bitcoin exchange traded fund. What is hilarious is that it ended up being accurate and probably should have just let it go and not even mention it. But based on current information, staff understands that shortly after 4 p.m. Eastern on Tuesday, January 9th, 2024, an unauthorized party gained access to the SEC GovX.com account by obtaining control over the phone number associated with the account. The unauthorized party made one post at 4:11 p.m. Eastern purporting to announce the Commission's approval of spot Bitcoin exchange traded funds, as well as a second post approximately 2 minutes later that said Bitcoin. The unauthorized party subsequently deleted the second post, but not the first. Using the @SEC Gov account, the unauthorized party also liked 2 posts by non-SEC accounts. While SEC staff is still assessing the scope of the incident, there is currently no evidence that the unauthorized party gained access to the SEC systems, data, devices, or other social media accounts. Now, of course, this is why we talk about on this channel not utilizing any sort of cell service or phone service, specifically SMS texts, for your two-factor authentication, because that can be hijacked in a myriad of ways. The preferred method, of course, is at least utilizing some two-factor authentication application, such as Google Authenticator, Authy, or something along those lines. And for the most protection, in my humble opinion, you should utilize a hardware option. In this particular case, what I utilize a lot of the time are YubiKeys, and these are basically little USB devices that will basically plug into a computer or utilize NFC to then confirm that you are the actual owner, and then you have basically a hardware verification that you own the account. The other thing that you can do if you don't want to invest in that, if you have an old cell phone, which a lot of people do, you can turn off all of your Wi-Fi, Bluetooth, all of that, and keep that cell phone for multi-factor authentication alone. You can use a Faraday pouch or something along those lines to keep it safe, and then throw it in a safe as well if you prefer to basically stay as secure as possible. And clearly, the SEC doesn't have a very good security team, because if they did, they would have these options in place. So pretty disappointing from that factor. We have this basically governmental body that's telling us that they're here to protect us, but they can't even keep their own accounts secure. Or it's a complete farce, and it was never accidentally tweeted or hacked in the first place, or it wasn't hacked in the first place, and it was accidentally tweeted out by Gary Gensler while he was drunk at 4 o'clock in the afternoon. Who knows? And then he had to backpedal and was like, oh, I made a mistake. So, what do you guys think? I think it's a little ridiculous, but just wanted to give you guys some security tidbits on that, as far as so you can protect your own accounts. Upon becoming aware of the incident, staff in the Office of Public Affairs posted to the official Gary Gensler X.com account at 4:26 p.m. Eastern, alerting the public that @SEC Gov account had been compromised. An unauthorized post was made, and the commission had not approved the listing and trading of spot Bitcoin exchange traded products. Staff deleted the first unauthorized post on the @SEC Gov account, unliked the 2 liked posts, and at 4:42 p.m. Eastern made a new post on the @SEC Gov account stating that the account had been compromised. Staff also reached out to X.com for assistance in terminating the unauthorized access to the @SEC Gov account. Based on information currently available, staff believe that the unauthorized access to the account was terminated between 4:40 p.m. Eastern and 5:30 p.m. Eastern. The SEC takes its cybersecurity obligations seriously. Clearly, they do not, because if they did, they wouldn't even have this functionality in there. I mean, it's ridiculous. If you take it seriously, then you need to hire some new cybersecurity specialists, because this is really a no-brainer to prevent this, an SMS hijack, in my humble opinion. It's crazy. The SEC takes its, so commission staff are still assessing the impacts of this incident on the agency, investors, and the marketplace, but recognize that those impacts include concerns about the security of the SEC's social media accounts. The staff will also continue to assess whether additional remedial measures are warranted. Of course they're warranted. I just gave you the remediation. All right, SEC, I just gave it to you. All right, so get on that. Staff are coordinating with the appropriate law enforcement and federal oversight entities, including the SEC's Office of Inspector General, the Federal Bureau of Investigation, and the Department of Homeland Security, Cybersecurity Infrastructure Security Agency, amongst others, in their investigations. The agency will provide updates on the incident as appropriate. Importantly, the Commission makes its actions public on the Commission's website at sec.gov. The Commission does not use social media channels to make its actions public. Social media posts only amplify the announcements that are made on our website. Of course, this is just a backup of saying, oh, you stupid little peon, make sure that you always check the sec.gov. Well, what happens when the sec.gov is hijacked, or a DNS hijack, or something along those lines? Because those happen all the time. Anyways, pretty crazy. At the end of the day, I'd like to hear your thoughts and opinions on it. We got 22s in the chat. Son of a Rabid Tech, welcome to the channel. Good to see you here. All right, Bitcoin miner outflows hit 6-year highs ahead of the halving, sparking mixed signals. Now, we had the ETP go live, the ETF, and obviously we had the big pump up in the price, but who influences price more than anybody else within Bitcoin? That's going to be the miners. Why is this? Because miners are the direct inflow of new cryptocurrency to the market. This means that they have complete control over whether the market goes up or down, at least by and large, based on the amount of volume they mine. They have more influence over this. And the thing is every single halving, we see the same repeat where we get a little boost up and then we see the price come back down. We have a retracement before the halving, and then we have a supply shock during the halving. And it appears that what we have seen, at least in the short term, is that this is going to continue, and that the ETFs have not had an actual impact on the price of Bitcoin and the cycle in general, which means good news. The Bitcoin halving cycle is still in place as of right now. And at the end of the day, that is a lot of our strategy when we are investing in Bitcoin and cryptocurrency mining around that cycle. So we get to continue building up our cryptocurrency mining hardware and our cryptocurrency bags in tandem with that a little bit longer. And this is good news, I think, for a majority of people, because you can still get in and you get a little hype on the other side of things to make your ability with your power and all of that to mine just available, right? Whereas, you know, if you don't have this pricing where it's currently at, it's really hard as a whole miner to stay competitive. But we have to talk about this, because at the end of the day, large Bitcoin mining firms have a big chunk of the volume of Bitcoin, and they have a lot lower cost of power, all the way down to 4 cents a kilowatt hour on average. And really, the cost to mint Bitcoin is still quite low, quite a bit lower right now than the current price of Bitcoin at 42,000. We really should still be seeing around 26,000 to 30,000 Bitcoin or per Bitcoin at this given time. And so having a retracement down into the 30s would make sense, at least from this perspective, especially as Bitcoin miners start to prepare for the halving. And what are Bitcoin miners doing to prepare for the halving? Well, they're selling their Bitcoin and buying more hardware. More efficient hardware, more powerful hardware. We have the launch, of course, of the S21, which is a big deal from Bitmain. We have the M60S coming from WhatsMiner. Lots of new hardware, on the horizon. And to compound that factor, any smaller miner that is trying to get into the scene is snagging up all the old used miners from the larger companies and putting those on the network, which is driving the difficulty of it up, and of course will increase the actual price of Bitcoin once the halving takes place. So once we have that go in, we basically have a higher cost to mint by double. And where would that double be during the halving? Well, then we would talk about somewhere between 50,000 and 60,000 USD to mint a Bitcoin. And then once that hits, we'll see the euphoria come in and blah, 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 blah. More of it covered in detail with charts, etc. at sonofatech.com. But Bitcoin miners did have outflows, as expected, really. I mean, it says sending mixed signals, but this is really, coming from CoinDesk after looking at, the patterns of Bitcoin miners over the past 12 years. It really has always been around this time that Bitcoin miners will sell off a huge chunk and get prepared for the next halving. It goes on to say that crypto quant data shows that miners are moving Bitcoin to exchanges, likely because of a need to build more liquidity in anticipation of higher capital expenditures. Obviously, capital expenditures are going to be more equipment. Crypto quant data shows that a majority of the Bitcoin has moved from mining company F2 Pool. Bradley Park, an analyst at the company, told CoinDesk in a Telegram message that the move is due to miners facing increased costs. Park pointed to the increased costs of F2 Pool moving to Kazakhstan and the need to upgrade miners to Bitmain's latest Antminer T21. I don't think it's not called the T21, is it? Maybe it is, which decreases the rewards for mining and thus the per machine yield as the reason for the outflow. Just what I told you guys. F2 Pool's hash rate has already begun to increase, suggesting that it has begun upgrading its capacity. Hash rate is the measure of the computational power of a blockchain, group, or individual. Miners are entities that utilize extensive computing resources to validate transactions and safeguard proof-of-work networks such as Bitcoin. Most revenue is typically generated by rewards automatically awarded by the networks they mine in the form of tokens. Historically, miner outflows to exchanges can be a bearish signal for Bitcoin's price, as they often precede price drops. But this isn't always the case, and the correlation is not definitive. For instance, past increases in miner outflows have sometimes led to price drops, but there have also been occasions like in August 2019 when Bitcoin's price continued to rise despite the increased outflows. And of course, that's because the demand was there, right? So demand in 2019 was skyrocketing and getting ready, and then obviously more people want to purchase it and there just wasn't enough supply. So it really also depends on that. Is the Bitcoin ETF enough to hold up, though? In this particular case, will it increase the actual demand enough to really kind of buffer this price drop? Obviously, the price already dropped, but the question is can it drop further? Right now, analysts are leading towards the current miner outflow as not being an overly bearish signal, as it's occurring in the shadow of the listing of the first US Bitcoin ETFs, a monumental event that has been a decade in the making. Now, this article was written, I believe, quite a bit earlier on January 12th, a couple days ago. And then obviously we had that retracement, I believe, on the 12th, later in the day. This was at 5:08 a.m. And, it has proven out that, the ETF didn't really make up for it fully. And, we aren't seeing up only necessarily. That all being said, Bitcoin ETF approval is a historic moment for miners, they continue to say. Mining stocks represent an attractive opportunity for investors looking to gain access to the long-term Bitcoin adoption trade, the analyst wrote. Investors should turn their attention to the potential impact on the Bitcoin price now that spot Bitcoin exchange traded funds have been approved, broker Cantor Fitzgerald said in a research report. The approval should be viewed as a landmark milestone in Bitcoin's short history with substantial implications for long-term price appreciation, Cantor said. We believe this approval acts as a major demand shock to the market, occurring a few months before Bitcoin's recurring supply shock, the halving event expected in April 2024, Analyst John Siegler and Will Carlson wrote, when Bitcoin halvings occur, the rewards miners receive are cut by 50%. Once again, this isn't exactly true, and it's more nuanced than that. And it's very important that we acknowledge that Bitcoin mining receives income, revenue in sats from two different sources. One being the newly minted Bitcoin, the base, right? And then the second is going to be fees. And I've talked about this before, but when the Bitcoin price will stabilize will be when we see fees reach equilibrium with the base block reward. What happens during the halving is the base block reward is cut in half. And so we'll go from about 6 to down to 3 Bitcoin newly minted per block on the Bitcoin blockchain. And then, of course, we've started to see fees on the network rise because of things like ordinals. In all actuality, ETFs won't have near as an impact on the stability or the volatility of the Bitcoin price as something like ordinals will have. And that's because ETFs in general will have a bunch of basically paper Bitcoin and not that many transactions on the network. What this means is that the ETFs themselves aren't going to drive up fees on the Bitcoin network as ordinals would, and really at the end of the day does not have as much impact, at least on the volatile nature of the Bitcoin price. The good thing about the volatility within Bitcoin, once again, I'll mention this over and over and over again, is that it is very clear and evident what kind of cycle it goes through, which can be an advantage for the public because typically in markets like this, in securities markets as well, like stock trading and all of that, you don't have as much insight on these particular things, right? Like the actual halving cycles and all of this sort of thing. The good thing about Bitcoin is that it is transparent for everybody to see and participate within. The question I do have is now, as more and more people are aware of the halving cycle, how it impacts price and so on, will this have an impact in the future on the price in general too? Meaning, like, people are aware of what's going to happen with the price, just kind of like we saw with the Bitcoin ETFs. There's that old saying, right? Buy the rumor, sell the news. Everybody's buying the rumor of the approval of ETFs, and everybody sold the news like they were supposed to, which drove the price down. And it kind of ends up fighting against you if more and more people are aware of the nature of the market, right? And you end up having something happen that is abnormal because people are trying to all capitalize on it at the same time. With levered upside and theoretical hedged downside, we believe Bitcoin miners represent an attractive investment opportunity for equity investors looking for a way to access this long-term Bitcoin adoption trade. The authors wrote, adding that the spot ETFs could have a substantial positive impact on Bitcoin miner valuations. Once again, I would posture that the halving influences it much more, as do ordinals, which are driving the fees up. Investment bank H.C. Wainwright and Company said spot ETF approval is a historic moment for Bitcoin and the miners. I tend to disagree once again, and that's the entire point of today's episode of the Crypto Mining Show. I believe miners influence the network a lot more than ETFs. So it goes on to say, as ETFs offer both retail and institutional investors a familiar and regulated investment vehicle and should significantly expand access to the world's largest cryptocurrency. Quote, we believe many Bitcoin curious institutional and retail investors have lacked either the willingness or the ability to directly invest in Bitcoin given the nuanced requirements to acquire digital assets. Analyst Mike Collins wrote, we expect significant incremental demand for Bitcoin via these newly approved spot ETFs. And so what do you guys think? Do you think the ETFs are going to eventually have more of an impact? Do you think the early signs that it is not, will be bunked, right? Do we think that the ETFs will have a significant impact? Or do you agree with me to a certain extent that the Bitcoin halving cycle is still in place, still whole, and we really need to be looking at something like ordinals or other things that are driving up fees on the network to really determine when we'll move out of the traditional halving cycle and into a macro cycle for Bitcoin? Go ahead and comment or type into the live chat. Now, Bitcoin tumbled, right? It tumbles below 42,000. Coinbase and miners plunge as Bitcoin ETF mania becomes sell the news route. And like I was talking about, everybody's aware of this term, buy the rumor, sell the news. Well, if everybody's aware of it, nobody can capitalize on it, right? That's really just the way it works. Previous landmark events such as Coinbase's stock exchange listing and ProShares futures-based Bitcoin ETF debut happened near market tops. Bitcoin tumbled below 42,000 in a Friday sell-off, with cryptocurrency-focused stocks plummeting as Thursday's Bitcoin ETF euphoria turned into a market rout. The $42,000 level is a significant support level where prices may bounce from with potential buyers stepping in, crypto research firm Swissblock said. Bitcoin dropped below 42,000 on Friday, plunging at almost 10% as the euphoria over the Bitcoin ETFs approved this week gave way to a massive rout. Bitcoin has been as high as 46,000 earlier Friday and surged to a two-year high of 49,000 on Thursday when Bitcoin ETFs began trading in the US, but the heady prices didn't last long. Shares of Coinbase, the crypto exchange that provides vital custody services to most of the ETF issuers, lost 7.4% on Friday. Bitcoin miners Marathon Digital, Hut 8, and Riot Platforms all sank at least 10%. Marathon fared worse, slumping 15%. The declines happened a day after spot Bitcoin exchange traded funds began trading, marking a significant milestone for the industry. Bitcoin ETFs are a traditional financial vehicle that may give retail and institutional investors alike easier exposure to Bitcoin's price. Friday's price declines may not be a surprise. Research from CryptoQuant predicted last month that Bitcoin would fall to as low as 32,000 in the next month after an ETF approval, being a sell the news event. Not only that, if we look at the traditional halving cycles and what happens during this time right before the halving, we see a huge sell-off. We see miners sending it off, getting their equipment all in order. And where are we at with cost to mint? Well, we're still under $30,000 per Bitcoin on average for cost to mint, which means that Bitcoin miners will be willing to sell, the large ones will be willing to sell all the way down to 30,000. So 32,000 could be a reasonable estimate. Notably, previous landmark events such as Coinbase's stock market listing in April 2021 and ProShares future-based ETF debut in October 2021 happened near a significant peak in crypto prices, possibly foreshadowing cooling prices ahead. Bitcoin posted a massive 80% rally since early October without significant pullbacks to hit a two-year high as anticipation increased to a fever pitch into Thursday's spot Bitcoin ETF launch. A significant milestone for the digital asset industry that expands investor access to the largest crypto asset. Crypto research firm Swissblock noted in a Friday market report that the last leg of the Bitcoin rally to 49,000 into Thursday's Bitcoin ETF launch showed signs of running out of fuel, with sellers stepping in above the $47,500 price level. The recent dynamics in Bitcoin have not lived up to the expectations set by many Bitcoin maximalists, with the asset failing to break the $50,000 mark and hype surrounding ETFs showing signs of cooling down. Swissblock analyst wrote, "The critical question now is whether the market can sustain upward momentum." And like I said at the very beginning, by April, we would see 45,000. We seem to hit that mark. We'll have a retracement, and then we'll go back up to the $45,000 mark in the April timeline. And then we have 6 months to a year after that before we start to see euphoria and see that price increase to somewhere around $210,000 or date. Just depends on how you want to do it. Not financial advice, just what would happen if we continue the cycle, right? That's pretty much how it is. If we continue the Bitcoin halving cycle, these are the things we can expect to see happen. A retracement down into the $30,000 level, back up to the $45,000 level for the halving. Bitcoin miners begin to hold and stack before we move into the next price. Their cost to mint goes up, which means they can't sell at a lower level, right? You double your cost to mint. So we go from 30,000 to, 25,000 to 30,000 to, somewhere between 50,000 and 60,000. And then they really can't sell lower than 60,000. Retail investors start to say, oh, look at this. Bitcoin is going to the moon. It just went from 30,000 to 60,000 in less than a year. Everybody FOMO in, and then euphoria starts, and we have another bull run. This is pretty much exactly what happens every single time. We'll see. History doesn't always repeat, but it does rhyme. Bitcoin miners may be due a breather after the spot Bitcoin ETF, JP Morgan said, but obviously JP Morgan doesn't know what they're talking about. The total market cap of the listed miners in the bank's coverage has increased 131% since the end of September, the report said. This is just going off of more information that I was already covering. I don't want to cover it more because we did already talk about the outflows. I had just been reading this and kind of seeing what JP Morgan was saying. You can go read the article, links down in the description below. But they kind of missed the boat on this one in particular, right? Miners aren't getting a breather. I don't think miners ever will get a breather in general. We do get a breather in certain aspects, right? From the mining perspective, you get a breather when you are, not having to worry about cooling your equipment, right? That's the biggest breather, I think, in my opinion, from the mining perspective. We are getting, levels of Bitcoin price that are now allowing us to keep our heads above water and cover power costs, which is nice. But, at the end of the day, it didn't play out like a lot of the traditional investment firms thought it was going to play out, I think, right? And even the Bitcoin maximalists at the $50,000 mark. Now, Caspa on Rust evolving testnet is coming. And this is basically a combination on the Caspa network of not only moving the programming language from Go to Rust, but that will also coincide with increasing the blocks per second on the network, which does translate into transactions per second. And it is, slated to be the fastest proof of work network available, even to the point of eventually being able to outperform blockchains that are centralized like Solana. I'm looking forward to this. I've been looking forward to it for quite a few years now, as you guys are aware, and let's go ahead and hop into it. So on the evening of January 7th at 8 p.m., another pivotal chapter in the Caspa saga will be written in code and history with the second unveiling of Testnet 11. This public release is the second expedition into the new Rust code base that brings the promise of the impossible 10 blocks per second on a proof-of-work network. The digital experiment provides an arena where developers and enthusiasts will come together to push the envelope, exploring the dynamics of the Phantom Ghost DAG protocol live on the Rust programming language. Testnet 11 is far more than a proving ground. It's a digital recreation of the real world, focused on simulating and stress testing a miniature version of an entire ecosystem. A world's worth of transactions, all anxious to settle instantly to buy their favorite snacks. Its evolution on fast forward, where the protocol endures rigorous trials, loads of simulated throughput, real world mining and use, all while ensuring efficiency and security against any real world scenario. Rewriting the Caspa programming language from Go to Rust is an essential development to enhance performance and manage the complexities of the block DAG. This transition enables the groundbreaking achievement of 10 blocks per second, which allows for greater scalability and throughput. By increasing the blocks per second, the potential transaction speeds will go upwards of 3,000 transactions per second, as demonstrated in the highly successful first public release of TN11. The Rust programming language offers advantages such as higher efficiency and improved performance, memory safety, interoperability, error handling, and a growing crypto ecosystem and developer community. So since the first public testnet 11 captivated the crypto world, several enhancements have been implemented to optimize network efficiency and performance, improving high BPS communication, focusing on fine-tuning and orphan revalidation is crucial for seamless network functionality under high transaction volumes. Storage efficiency has also advanced with updates addressing the issue of quadratic writes in high BPS contexts, refining the network's data processing and storage capabilities. These updates, along with smarter caching through dynamic data tracking and enhancements like parallel processing for block submissions, signify a considerable leap forward for Caspa. a display of the developer's ingenuity and insight gathered from the initial experiment. Refer to the release notes at the bottom of this article for a comprehensive overview of the updates. If you want a link to this, it's down in the description below. Obviously, like, we still have some time before this hits mainnet. So a lot of this is going to be buy the rumor, sell the news. And so, you know, if you're looking at this from the perspective of what you should be doing, I suppose you would want to be either investing in miners for Caspa or investing in Caspa itself, and then being ready to sell it once it hits those high numbers. My humble opinion, though, is you really, at the end of the day, Caspa, for me, isn't viewing it as an investment vehicle as much as viewing it as, you know, unlocking a true capability of peer-to-peer transactions. And that is something that I've looked at for quite some time and kind of said, what really matters here? Do we really want the price to go up if we really want usability? And I think that is something that we've talked about in the past with Dogecoin. We've talked about in the past with, you know, all of these types of cryptocurrencies that have higher transaction throughputs. Really, you want a stable price point so that you can, invest and so on. Of course, one of the things that could happen here in this particular case is that you end up having smart contracts on the network and you have stable coins available to handle that side of things, while the actual investment side of things, because we are, decreasing the amount of Caspa that is generated per block and quite a bit faster than other networks, right? Is that the price of Caspa will continue to go up because of the tokenomics surrounding it. It's also going to be interesting for miners when we get closer and closer to basically having nothing but fees. And this is something that's worried me about Caspa from a mining perspective for quite some time. You see, the thing is with the chromatic policy on the reduction of block rewards, what you are ending up seeing is basically a very short span of newly minted Caspa hitting the network. This means eventually miners will only be making money off of the transactions. While this is true on almost all proof of work networks, including Bitcoin, Caspa's ends very quickly. And what that means is that if you purchase a Bitcoin miner, a Caspa miner, you do risk the potential of that actually not making enough for you to pay your power bill at the end of the day, because it won't be getting any newly minted Caspa. To compensate for this, what has to happen is basically an increase in the amount of transactions on the network, which is what obviously we want to see with Caspa happen. And hopefully with the increase in blocks per second and all that sort of thing, you see wide adoption of Caspa in transactions. And that has to happen for the miners to actually be profitable on their systems. What they do risk at the end of the day, which will be, yet to see, is that if the network doesn't get adopted faster than the newly minted Caspa runs out, then you will be in a position where miners begin to turn off and the network loses its security. So I don't know. It's up in the air for me. The actual tokenomics, as far as how quickly you run out of base reward Caspa, has me a little concerned, to the fact to where, like, I wouldn't spend a ton of money on Caspa miners, especially because those Caspa miners can only mine Caspa. You guys know I don't like that with ASICs in general. So that's kind of my thought on it, but I am excited to see what happens with this. Hopefully what we end up seeing with Caspa in general is that we see blocks per second, get pushed through. This is successful. And we start to see it be implemented in third-party solutions, payment solutions, which will then drive the fees up, making basically the block reward a moot point at the end of the day. Everything in cryptocurrency right now, from a proof of work perspective, from Bitcoin to Caspa to whatever the network may be, is purely reliant on this in general, which is the adoption enough to drive the fees up to make the miners profitable or not? If not, those networks will lose security. If so, then that will be the network that every miner moves to. And that is really where we're at. I mean, this is why at the end of the day, like if you want proof of why this is so important, look at Ethereum before it moved to proof of stake, right? The reason why miners were so profitable on Ethereum wasn't the base Ethereum block reward. The reason why miners were so profitable on Ethereum was because the network was being utilized at such a heavy rate that the transaction fees were so high that the miners were getting paid out a ton on top of the base block reward in Ethereum. So you really need to be at the Ethereum level of transaction fees for it to make sense on the mining side of things. Let's get into some tech. NVIDIA has officially launched its new Super Series, or announced it. They've announced the pricing as well as release dates. I put them in my calendar, so I'll be able to order them. I'm curious if you guys will be picking them up, but we do have pricing for all of these now. NVIDIA Founders Edition cards for some of the latest GPUs have been sent out to reviewers. The 4070 Super and 4080 Super are among these models to set to receive this reference edition. Interestingly enough, the 4070 Ti Super apparently is not getting a reference model. In terms of pricing, the 4080 Super is slated to be priced at $999. I think this is coming into play because of the release of the RX 7900 XTX and needing a valid competitor for that particular GPU at that price level, so it makes sense that they would do this. This is $200 less than the launch price of the non-super version, the 4080. NVIDIA appears to be confirming earlier speculations that the RTX 4080 Super and 4070 Ti Super will replace the current models in their product lineup. The updated chart no longer includes references to these specific key SKUs. So supposedly that means the 4070 Ti will go completely away, as well as the RTX 4080 will go completely away. Unfortunately, what that does mean from our perspective as GPU miners is that stock levels are not going to change here. We aren't getting additional SKUs that will increase the stock levels, therefore keeping the price of GPUs lower. Oh no. NVIDIA and their scummy business practices, as always, will go ahead and make sure that they suppress the volume of graphics cards they produce to keep inflated prices and make you pay more than the actual GPU is worth. But, you know, that being said, we should have expected it. The 4070 Ti Super is set to take place of the RTX 4070 Ti non-super at a price point of $799 US. Simultaneously, the RTX 4070 Super is expected to be priced at $599 in retail, while the existing non-super model is officially confirmed to have a revised MSRP of $549 US. As we saw before, NVIDIA is focusing on the performance of their shaders, ray tracing, and tensor cores instead of their CUDA core specs. Nevertheless, NVIDIA RTX 4080 Super is to feature 10,240 CUDA cores, 16 gigabytes of GDDR6X memory, 23 gigabits per second, and a total graphics power of 320 watts. But NVIDIA claims that this model will actually require only around 246 watts when playing and 15 watts when idle. But of course, in mining, I would expect closer to the 320 watt TDP, just to be clear, because you really are starting to push those GPUs in a mining environment to their full potential. At least you should be trying to do that at the end of the day, especially with dual mining and all that coming into play these days. You know, we've really gone away from the days of tuning everything down for efficiency on a single algorithm to now, I mean, a lot of the times I throw it in there, I go full power, full bore, full balls to the wall, and I put a memory intensive algorithm and a core intensive algorithm on it, and I just run it as hard as possible. What do you guys do? Is that what you're doing now? I mean, I'm doing it pretty much across the board. My 5700 XT is not so much, but that's a different case. The RTX 4070 Ti Super is to feature 8,448 CUDA cores and 16 gigabytes of GDDR6X memory, making it, I mean, in my humble opinion, the most enticing model because we're getting 16 gigabytes of GDDR6X memory on a cheaper model, so it's comparable to the 4080 Super, but at the end of the day, we get, you know, that memory intensive performance improvement over the 4070 Ti itself, and that makes it the most interesting. Kind of akin to what happened on the CPU side with the 14700K versus 13700K, where we got more cores, which made it more enticing. But on the 14900K, we didn't get anything better than the 13900K, just a much hotter CPU. And we're kind of seeing that on the, I think here on the GPU side of things for NVIDIA, albeit a little bit better than that. I think the 14900K is a disgrace. While it ships with a total graphics power of 285 watts, the average gaming power is estimated at 226 watts. And 12 watts when the card is idle. The memory upgrade is undoubtedly the most noteworthy feature of this SKU. NVIDIA claims that the 4070 Ti Super will offer 2.5x the performance of the RTX 3070 Ti, but one should not be deceived, as this data is referring to DLSS frame generation support in some titles. Officially, the RTX 4070 Ti Super launches on January 24th. The GeForce RTX 4080 Super powers fully ray-traced games in 4K resolution at 1.4 times faster than the RTX 3080 Ti without DLSS frame generation. I mean, and really that's what we care about on the mining side of things is not going to be, you know, obviously DLSS from the gaming perspective has changed everything. And the 40 series DLSS is much improved over the 30 series DLSS, not only in frame rate, but also quality, meaning like 30 series DLSS kind of looked like trash, but 40 series DLSS is almost indistinguishable if you set it on the quality setting. So there is that to be mentioned from the gaming side of things, but from the mining side of things, we're really still looking at what raw power improvements are we getting, if any. And 1.4 times faster than the 3080 Ti is probably still not enough to make up for the used prices of the 3080 Ti, buying them secondhand from, you know, farms. That's going to be changing, of course, as we get closer and closer to the halving, and as we move into the bull run, that will change. Now, the 4070 Ti, I think, is the most interesting one. We actually get the biggest performance improvement at 1.6 times faster than the 3070 Ti. And most impressively here is going to be that significant memory bandwidth increase to 672 gigabytes a second. And so really, if we're looking at that right now, to put that into perspective, I think the 4070 Ti and the 4070, which are currently available, we're at the 504 gigabytes a second. For comparison, that's going to put you around 60 megahash a second on ET hash. And so the performance uplift, you know, getting another 172 gigabytes a second should easily get us into that, was that a 20% increase? So that's 70 to 80 megahash a second on ET hash range. And we are still sticking at, you know, a decent price, decent power consumption level at that 285 watts that the 4070 Ti already had. So this is definitely a big improvement from the mining perspective, especially on the memory intensive algorithms like AutoLicos 2 and so on. And we'll have benefits still on ProgPal, which should be noted because we're getting the memory side of things, which helps ProgPal, as well as we're getting the increase in CUDA cores, which is, you know, beneficial for that in particular. Another one that we would be amiss if we didn't talk about is the performance improvements on something like Conflux, which should be pretty impressive at the end of the day. So I'm definitely looking forward to the 4070 Ti Super most. The 4070 Super, I'm not, you know, I'm not that excited about. We are getting a huge bump in CUDA cores from the 5888 to the 7168. But we are still stuck on a 192-bit bus, you know, like a skinny white girl. It's not looking good as far as that's concerned. I like big buses, and I cannot lie. My pick's the 4070 Ti Super. What's your pick? Let me know in the comment section below or the live chat. Finally, now, if we are looking at trying to power all of these things, NVIDIA's been moving their, they're standard on the power side of things from, the traditional PCI Express, like 8 by, and they've moved over to the new power standard, which is the 12 VH power and VHW. So this connector makes things very, very difficult in the mining side, not only because of its high throughput that's required, but also because there's not a lot of large power supplies that really support more than one of them on the power supply. But that is changing as we move forward, and I think obviously it needs to change, especially even not just from the crypto mining perspective, but from the AI perspective, as the 40 series is being leveraged pretty heavily in the AI scene. So that's probably an influence for this as well. But this new PSU from Cooler Master that was unveiled is a 2800 platinum power supply with 4 of the 12 VH power connectors, or sorry, yeah, 4 of them, 1, 2, 3, 4, which would allow you to power 4 of them. Now, this works out very, very well, I think, in this particular case, when we're talking about building rigs for Chlor AI or Vast AI or something along those lines, because for the most part, most consumer grade CPUs are going to support, basically 4 by 8 lanes. And if you are wanting to get that full performance for anything from proof of useful work to AI, you're really going to want all of those lanes. And so this kind of slots in at a very nice proof of useful work build option if you are looking for one. So that's why I wanted to bring it up. The new PSU is based on the ATX 3.1 and Gen 5 PCIe specs, which means it ships with the new 12 6x2 power connectors, an upgraded version of the 12 VH PWR, or the new version of the 12 VH WPR. Now it's the PWR. The new power supply, which was shown at CES 2024 booth, was visited by Paul's Hardware, who was among the first few media members to take a closer look at the new X-Silent and X-Mighty power supplies. While the X-Silent prioritizes quiet operation, the X-Mighty emphasizes high power, which for crypto miners, that's the one we're interested in. The series will be available with power ratings of 2,000 and 2,800 watts. As pointed out by Paul, these ratings apply to countries with 220 volt voltage. In the United States, where the standard is 110 to 120, the power rating will be lowered. Of course, if you are mining at this point, you should be running off 220, right? At this point, just in general, we've covered that a ton on this channel, but even from the home miner perspective, get yourself a 200 to 240 volt circuit in your house. Utilize an L630P plug or whatever, and utilize a 220 or 200 to 240 watt or volt, power PDU. So that's really where you want to go anyways with this, is what it is. The 2,000 watt power or model was teased in December, and the 2,800 watt model is making its debut at CES. This power supply unit stands out as the world's first with not just 1 or 2 GPU connectors, but 4. Designed to support up to 4 RTX 4090 GPUs simultaneously, it's evident that this product targets workstation systems utilizing multi-GPU setups for tasks such as rendering or AI acceleration or cryptocurrency mining. Yeah. Similar to the 2,000 watt version, this unit includes PM bus and USB connectors, enabling users to monitor real-time power supply characteristics through digital monitor and master control software. That's pretty cool. These tools provide insights into temperature, voltage, efficiency, and fan speeds. All those features are amazing, especially from a management perspective for cryptocurrency mining. I think that's awesome. Worth adding, that Cooler Master confirmed that the X-Mighty power supplies will ship with cables rated at H++ that have angled connectors. This means no adapters or third-party custom cables are needed. The exact launch date and price for the Cooler Master are still unknown, but it's safe to assume that it won't come cheap. I mean, easily $1,000, right? I think at this point, how much do you guys think this X-Mighty 2,800 watt platinum power supply will run you? Now, I have a piece of news that's not really related to cryptocurrency. Maybe if you're into the hard drive mining space, you can go check out Digital Spaceport for that. It's not my specialty. It's not what we do. We're focused on GPU mining over here. That being said, Samsung's 990 EVO is the world's first hybrid PCIe 4.0 and 5.0. Franken SSD has 2 different interfaces with 2 different lane widths. So Samsung has accidentally published the product page for its upcoming 990 EVO NVMe SSD, complete with marketing and hardware specifications. Although Samsung is mostly known for making top-end SSDs like the 990 Pro, the 990 EVO is a firmly mid-range drive thanks to its read and writes of just 5,000 megabytes per second and 42,000 megabytes per second, so read and writes respectively. However, the 990 EVO is unique in its 4 PCIe 4.0 lanes and 2 PCIe 5.0 lanes configuration. Perhaps the 990 EVO's most unique selling point is that it supports PCIe 5.0, but with only 2 lanes, which is equivalent to the bandwidth of the 4 lanes of the PCIe 4.0 that it also offers. PCIe 4.0 SSDs work completely fine on 5.0 slots, so there's technically no advantage for the 990 EVO to support PCIe 5.0, especially when it's not even bottlenecked by the 4.0 connection. I think it's still super interesting though, right? There is a niche scenario where these 2 PCIe 5.0 lanes would come in handy. Although the bandwidth for the 2 5.0 lanes and 4 4.0 lanes are both at 8,000 megabytes per second, there's a difference if the data connector only has 2 lanes. On a PCIe 5.0 interface with 2 lanes, a PCIe 4.0 SSD will only be able to use 2 lanes and would see its bandwidth cut in half from 8,000 to 4,000. By contrast, the 990 EVO would be able to retain its normal bandwidth since it can run 2 lanes at the PCIe 5.0 speeds. Additionally, running 2 lanes instead of 4 could save on a little power. What else does it save on? Right? That's important from our perspective, and this is the reason why we bring it up. When system building, right, and we're building out things like, let's say, for AI rendering or for crypto mining or proof of useful work or rentals on Fast AI, if you're doing something like that and you want fast speeds on the hard drive space, but you don't want to use up all of your lanes because you need all of those lanes for GPUs, that's where this thing makes a lot of sense, right? I don't think from the perspective of hard drive mining or any of that sort of thing like Chia or anything along those lines that this has a ton of benefits. The other place where this comes in handy though too is if you're doing some sort of RAID 0 configuration where maybe you only have 2 lanes on the supplemental NVMe slot or M.2 slots on any particular motherboard. I think this one, trying to remember, most of them, yeah, like this one here, like you're going to have 4 lanes on all of them. So like in these case, like in latest cases, you don't really run into that. But these are all 4.0. So that's a little different as well. Anyways, there you go. Just some thoughts on what that would, where that purpose would sit if you're rig building, you know, and why you might be interested in the 990 EVO, especially considering that it should come in at a lower price. You can utilize less PCI lanes, have more available for your GPUs and that sort of thing. Not as big of an issue, I think, on the AMD side of things because of the amount of PCIe lanes. And definitely not on like the Threadripper series or something like that. But still a pretty big issue on something like a consumer grade, right? Especially Intel. So there you go. We have a new miner release from Rigel. Rigel Miner version 1.13.0 adds support for mining arbitrary Kapow and ET hash coins. So Rigel, you know, they started out, this particular mining software started out very specialized, and I think utilized their success within that specialized realm, which was essentially, I think, initially for Caspa. Is that correct? And then once they went from Caspa, yeah, it was Caspa. And then they started adding, you know, some of the newer ones, Nexa, that sort of stuff. Really was known a lot for Caspa and then for Nexa. And they're adding more support for basically older algorithms now to compete. And we need this in the mining software space. As you guys know, the bear market hit and development stopped on most of the major miners, right? Team Red Miner gets an update miner. We get, you know, no updates from a lot of these. Like if I look at my list. You know, G miner hasn't had a release in forever. T-Rex miner hasn't. NB miner hasn't. Team Black miner hasn't had any releases recently. A lot really haven't had any releases. So we need more competition in the market. I definitely want to see, there's a lot of innovation available too right now, especially with the newer GPUs. A lot of things that could be done on the mining software side of things for the RX 7000 series. A lot of things that could be done on the Intel side of things for improvements in hash rate that are just not getting done. That, you know, if we're in the bull run, we'd be getting like crazy support for Intel and for the 7000 series, and even 40 series is not getting as much support. And we really only have like 2 mining software developers that are old school that are still developing frequently, which was Doctor with SRB miner and then iDoc with BZ miner. And they're really the only 2 that have continued on with frequent updates and support for new algorithms and so on. So I welcome new competition with Rigel coming in, giving us another option to test for Kapow and ET hash. Of course, that means a lot more testing on my side of things for GPUs, but I welcome it. Hopefully we start to see more support for Intel as well, especially as Battle Mage is coming up. I think the only other developer that is old school that's still developing but at a slower pace is LOL Miner. LOL Miner has kind of moved into also, you know, that dev has moved into developing algorithms for coins, right? So for Ironfish, Flux famously, that sort of thing. And so he's kind of been doing that by and large, and then, you know, not as many frequent releases, but LOL Miner's still getting pretty good updates. So I didn't want to leave that behind and make it sound like LOL Miner's not doing anything. And then the most exciting thing for Caspa, I think, as far as Caspa investors, especially if you were invested on TradeOgre, TradeOgre had locked, you know, their deposits and withdrawals on Caspa. It was driving the price down to sub penny, which was, you know, obviously terrible for a lot of people that had their Caspa in TradeOgre, watching the price go up over 10 cents, not having access for that liquidity. That's been resolved now, and you can see a huge green candle on Caspa. The price has been resolved, and it is at 11 cents. Albeit, I think if we look at current price, yeah, it's pretty much spot on. 11.64 right there, 11.65 on TradeOgre. So, you know, you can go over there if you weren't aware, and you need to sell your Caspa or trade it or whatever, and you had some on TradeOgre, go ahead and get it off. This is the kind of thing that happens a lot with centralized exchanges. So I'm going to remind you guys, when you're, you know, especially these smaller cryptocurrencies, if you're mining them, test the exchanges. Make sure you do it with a low amount. Don't go send your whole bag to an exchange and then get it trapped there. Make sure you're sending like a small amount, testing, making sure the exchange is working before you utilize it, and don't hold anything on any exchanges. Make sure that you're taking that and moving it into self-custody so you don't end up in a position where a lot of people ended up with during this issue on TradeOgre with Caspa. So there you go. This week we had one of the coolest pumps I think that we've, you know, seen in a while, and that came from Ethereum Classic, the old, real, true Ethereum. And we saw that go up 36% over the past 7 days. It even went up higher than that. It hit $30 for a brief moment. And it's nice to see this because, you know, obviously you want the proof of work side to win. You just do. You just want the proof of work side to win. I wish that the algorithm would be modified a little bit more to kick, you know, ASICs off. I get it though. I know that my audience even has a bunch of ET hash miners, ETC hash miners, you know, the ASICs. I still think if Ethereum Classic wanted to be like true to its roots though, it would modify the algorithm and kick those ASICs off. That's my humble opinion. That's what I would prefer. It's also why I like Ethereum. Now rebranded to Hypera more than I like Ethereum Classic. That's me. That's the way I see it. How do you see it? Should they keep their ASICs on the network? Or should they move to something else? Let the ASICs go to ETH proof of shit and whatever, all those ones. ETH W or whatnot. ETH withdrawn. Other than that, ALF is still having its huge run up at 256 right now. It's up 27%, which is incredible. I'm still expecting that to flow over into Radiant at some point. I think from a technical perspective, ALF has a lead, even admitted by the Radiant devs that ALF kind of has the lead on the tech perspective side of things. I'm just purely referencing the volume and mining economic side of things and the influence of FPGAs on that network. The influence of the FPGAs on ALF, from my knowledge, like we stated before, is the same FPGA strategy that's going on with Radiant. So I don't think that, Radiant will have a big pump up, more than likely, based on the tokenomics, but not based on the tech from the Blake 3 side of things, because you have the Shaw 512256D for Radiant. Is that right? Yeah. So I think ALF's a little bit more superior from that perspective. Just some thoughts as far as that's concerned. And then Meowcoin had a pump, but Meowcoin's APIs have been so jacked up, I never know if it's actually pumping or not. Apparently went up 27% over the past week. As far as mining profitability, on the 4090, we're seeing ALF at the top with Pepe proof of work in second, but be careful with that one. And Pyron really in second here. Still seeing really good dual mining profitability across the board between Hypera and Alephium. That's something to definitely take into consideration, especially as it pertains to the winter. And the reason I say that is because now that it's cold out, it's dual mining season, baby. It's dual mining season when it gets cold out. So consider dual mining at every turn. I think, and keep your rigs warm, Speaking of warm rigs, I think my 3070s will show you guys. They're crazy right now. They're dual mining. It's loading. Hold on. I think we're dropping a lot of frames. Yeah, we're clearly having internet issues, so apologies for that. But yeah, we're all like in the 40s and 50s right now. Dual mining, Hypera and Radiant, and just all that power. You guys see where the internet shut off and came back on though. It happens. So let's get into questions and answers. Remember, super chats are never required. Always appreciate first to be answered. And then tagging @SonOfATech will highlight the message orange and I'll be able to read it easier. Ted said, @SonOfATech, how you feeling in the weather? The weather definitely hurts the autoimmune issues I got, but we're getting through it. Daniel Reen says, @SonOfATech, the T21 is the 3-phase machine. Okay, yeah, so they did the S21. Doesn't it still have to, it still has a modified connector, right? You have to get an adapter for that one though as well, I thought. Schneidi says, @SonOfATech, what's up? How's it going, my friend? Welcome to the stream. Ted says, @SonOfATech, the wallet still says maintenance on Trade Ogre. Well, the price is corrected, so good looking out though on checking that. Heavy Flavor says, @SonOfATech, Caspa on Trade Ogre is very interesting development. Do you know any additional technical details? Like, did they cover the losses from their pocket or what happened? No, I don't have any technical details on it yet. I just wanted to mention if you had some over there, you can go dump it now. Shiny says, @SonOfATech, you just got a bunch of 40 series. You're going to grab some 40 supers as well. Yes, those will be grabbed and tested. Probably take priority over the rest, right? So I think the first one's on the 17th, the first launch of the 4070 Super. And so we will go ahead and get that going. I think that week. Running up to that, this week on locals, we'll be testing the 7900 XTX from AMD. And then as those release, we'll test those first. Scale says, outside of tech, been looking around for a new spec mine. Didn't find anything on my end. Any luck with you? Yeah, it's all on locals if you want spec mines. Anonymous Miner says, outside of tech, I was thinking of getting into ASICs. Which do you think is better, a KS1 or unminable or an S19K Pro? Let's see. If you're going to get into ASICs, I mean, just consider the fact, like we talked about with Caspa, I mean, my concern is that we have a reduction of the rewards, a very quick reduction of the rewards. So your longevity, you know, unless people start adopting it at a rate that's even higher than Bitcoin, there won't be enough fees on the network for the ASIC to be viable for the long term. And you can only mine that coin with it right now. So that's kind of my my thoughts as it surrounds the Caspa ASICs. I think the Caspa ASICs are a quick buck, right? But anything that's a quick buck, I just personally avoid at the end of the day. So that's my thoughts. I know a lot of people disagree with me on that. But also, if you're talking about the KS1, the KS1 is going to be outpowered so fast that not only are you hoping that the network gets used to the point to where fees are significant, but you're also hoping that more KS3s aren't going to take all of your rewards anyways, which is probably what will end up happening, right? Seven Hughes says, as I'm a deck, proof of useful work worth investing hardware in for the bull next bear. I think being able to shift into proof of useful work is probably advantageous. It's about keeping your options open, right? And the great thing about GPU mining is that you keep your options open. And so if we are talking about like prepping really at the end of the day, you know, maybe you do change your whole rig design up and you invest in that. Will it pay off though? I don't know, right? One, the only proof of useful work that will make any sense at all at the end of the day is going to be something like Flux, right? Like Dynex for proof of useful work doesn't need to be modified in the same way from a build perspective. You're really only adding one viable option from a cryptocurrency mining perspective. From a total like top-down view, you do add the vast AI capability, the Chlor AI capability, and so forth, which could be an argument for that. So you open up that side of the possibilities as well for making revenue on your GPUs. So you open up some doors, right? Whereas if you're just plopping in octo miners and you have the octo miners don't even support smart access memory, which I think is going to come into play with a lot of these algorithms at some point. But two, is only PCIe 1.0. It's not going to support any of those. You don't have those options open. Your options are old tech. And then you got to ask yourself, well, is the newer tech going to be more profitable? So it's all about keeping options open, but also doing what you can afford. It may be, though, that it's more profitable to have, really high-end 4x4090 rigs that are capable of that than having a bunch of, 3070s in an octo miner. But then if we get to the bull run and, a traditional proof of cryptocurrency becomes the most profitable, you'd rather have the 123070s in an octo miner than the 44090s. Maybe, right? Just thoughts. From my perspective about keeping your options open. Martin says, ask Tech, how long after Solar launch? What? Can we wait? I need you to retype that. Heavy says, ask Tech, just want to appreciate great level of video production in the PS5 video. Great job, and everyone go see that if you're not planning on getting those cards, even if you're not. Thank you, my man. Definitely that's going to be the new standard for this channel as we move forward. Keep doing the live show once a week on Sundays, but I'm definitely reeling back. I'm not going to be doing daily videos. There'll be one video. I'm going to try to start hitting one a week. It'll probably be one every 2 weeks. The testing involved is extensive. Obviously, with production comes extended, time for production. So, I think that video clocked in at probably like, I don't know, let's see. It was 2 Saturdays at 8 hours, 16, and then 10, 20, about 36 hours worth of work. About 40 hours worth of work just for one video, right? So, and I have a day job, so it's going to be a little bit. Even if I didn't have a day job, it would be a full week of work just for one review video. Because I do everything myself. Jazzcat asked if I saw Dynex is going malabliss. Yes, I did see that. We reported on it already. Corbin says, any thoughts on Crypto Luck, a new kapow showing on mining pool stats? No thoughts on it at this time. Anonymous Miner says, that's how attack. The KS1 would be mining other coins through unminable. Yeah, that doesn't work like that. Unminable, you're still mining Caspa. You're just getting paid out in another coin. So it's converting the Caspa on the back end and paying you out in the coin. So if the Caspa stops being profitable, it's not mining anything, right? You see what I'm saying? Team JFK says, Ask Tech, what settings do you have in software for those 3070s? Those are, I believe, locked low. I have them conservative now. I can pull up the flight sheet. Core clock, 1470. Memory offset at 2000 and power level at 200. Yeah, memory clock at 2000, core clock at 1470, power level at 200. Dual mining Radiant and Hypera. Daniel says, at Sonotech, I was watching RPM earlier testing the KS0 Pro. He did a blockchain search for the address in the miner. I mean, we've already known that they do that. Yeah. Crypto Occasion says, at Sonotech, what do you think about the Ethereum Classic's new DOA project? I haven't looked into that one yet. Henry says, at Sonotech, I think you have a video on how to mine, solo mine Alph node. Right. Yes, I do. I also have a written guide over on locals. Jazz says, Tech have heard anything from Safe Trade. They still have Ethereum disabled, and I have a bunch stuck there. I haven't heard anything from them. Sorry to hear that, man. Yeah, you got to be careful with exchanges, guys. Anonymous Miner said, Tech, thanks for all the advice. This is not advice. Martin says, when can we wait for the 4070 Ti super test? I mean, it's at least 2 weeks out. 3 Mil says, Tech, great stream. We're out here. Hit the like, y'all. Thank you, good sir. Jock says, Tech, did you follow the technicals back in the day? Yeah, and it's always coming back. Jazzcat says, Tech, is there any benefit over using unminable versus Zerg pool? Direct benefit? No. If you want to support creators, I guess it's nice because they, they have their, referral program. Edith says, what are your thoughts on ETC? I already talked about that today, so you can rewind later if you want to go over that. I think they need to modify their algorithm. That's my thoughts. All right, ladies and gentlemen, boys and girls, that was a long stream. I think we went for, hour and a half, so I'm going to call it today. Be sure to hit the like, comment, subscribe, and notification bells down below. Tomorrow evening, we'll hopefully have the test bench up and running, and then starting Tuesday or something, we'll start live streaming testing. of the RX 7900 XTX over on sonofatech.locals.com. If you just can't get enough and you want to hear me talk about the Bitcoin halving more and the pricing strategies surrounding cryptocurrency miners, check out sonofatech.com for my crypto e-course. I appreciate every single one of you. That helps me just keep the channel going, etc. We have one more sponsor that I'm going to be running for the next 3 months. We'll talk about that in a little bit. And that one's an interesting one. Can't wait.